Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Apple has been one of the top performing stocks over the last 20 years, but this is now a very mature company, one of the biggest companies in the world. Actually has a very mature product line, and so it's not quite the no-brainer stock buy that it was even just a few years ago. Today, I'm going to give you 3 reasons to buy Apple stock and 1 big reason to sell. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and I want to thank this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. I think it's worth starting with how we got here from Apple's perspective. You can see from this chart that the stock has been an absolute outperformer, but the company's compound annual growth rate, which is the purple line on the bottom, was really phenomenal between 2004, when this chart starts as a 20-year chart, and about 2015. You can see that there was a low point, 14.4% annual growth rate in 2009. But remember, that was during the financial crisis. So the economy was terrible and Apple was still growing at a really rapid rate. The growth rate peaks in the 70 to almost 80% range. So that is what the company was 15, 20 years ago. You can see that that growth has really slowed over the last decade. I'll get to kind of breaking down those segments where there is growth and where there's not growth. But I think this is important to keep in mind. The other thing to note is that Apple has really benefited from what we call multiple expansion. This is a 10-year chart of Apple's price to earnings multiple. In 2014, when the company was a higher growth company, you could get the stock for 12, 13 times earnings. There was even a point in 2016 where you could get the stock for 10 times earnings. But right now, Apple stock is trading for about 30 times earnings. So when we say this is a bit more expensive stock than it used to be, this is exactly what I mean, is that the price to earnings multiple, price to sales multiple, any way you want to look at this, has really gone up over time. Now, one of the biggest reasons to buy Apple stock is because of the iPhone, the stalwart product that really started the company's meteoric rise. This is really the center of the ecosystem. It's what brings people into Apple. It's what makes Macs more attractive. It makes iPads more attractive. And of course, all those services and accessories, something that I'll get to in just a second. And the iPhone is now really a steady product. You can see from this chart that iPhone revenue has actually not grown all that much over the past decade. Compound annual growth rate of about 5%. And you can see that without that little bump during the pandemic, and that was also when prices were increased, revenue would be relatively flat. There are a couple of reasons for this. One, the market has just become much more saturated. But the other thing that is impacting all of the iPhone products is the fact that they just simply last longer. They're not improving quite as quickly as they were in those early days. And the upgrade cycle has gone from really every 2 years to more like every 3 to 4 years. So that really impacts Apple's revenue. So you don't buy Apple as an iPhone maker because the iPhone is going to grow. You buy it because it's such a sticky product, such a valuable part of the ecosystem. Speaking of that ecosystem, the growth in the last decade has really come from accessories, and in particular, AirPods. You can see here that this segment has a 19% compound annual growth rate. And I highlighted where AirPods were introduced, and that was really when this segment took off. Now it's very common to buy a new pair of AirPods more often than you buy a new iPhone. This has become a $40 billion business for Apple, just a tremendous success story. And like I said, this is where a lot of the growth is coming from, is accessories that go beyond just Macs, iPhones, and iPads. So that's a big growth story. The second big growth story and the third reason to buy the stock is the services business. Like accessories, this is something that is tacked on to the core products that we're interacting with every day. So services are everything from the fees that are charged for App Store transactions, to iCloud subscriptions, to Apple TV subscriptions, and also that revenue that Apple gets from Google to be the default search engine on Safari on iOS devices. You can see that services revenue has grown at about a 20% compound annual growth rate over the last 7 years. This is getting close to being a $100 billion business. But this bit brings me to the one reason to sell Apple stock, and that is these two growth segments, the accessories and services, are really tied to the core products, particularly the iPhone. And as I talked about earlier, the iPhone is not growing. As a result, there may be a cap on how much you're going to be able to sell in accessories and services. On top of that, we have found out just in the last week in a lawsuit by the Department of Justice that is trying to make it illegal for Google to be the default search engine on the Safari browser in iOS, that Google is paying 36% of revenue from iOS searches to Apple. We don't know exactly what that number is, but the rumor has always been that it's somewhere around $20 billion per year. That is pure profit that is coming from Google to Apple just to be the default search engine. And it's possible that that connection is broken if this lawsuit is successful. The winner in that would likely be Google, because they wouldn't have to write that $20 billion check to Apple every year. And Apple would actually lose a 100% gross margin business. So I think this could have a massive impact on the company and on the company's bottom line. If the $20 billion number is true, that would be about 20% of Apple's net income. So that would be a really big impact for the company. And right now, Apple is not a cheap stock, trading for about 30 times earnings, both on a trailing basis and a forward basis. So investors are not expecting a lot of growth in earnings over the next year. So not only do you have an expensive stock, but you have a big risk that a huge source of that net income could come out of the business over the next few years. So that is absolutely a worry that investors should have, that the gravy train that is Google search on iOS devices as the default is potentially going to be ending over the next few years. I don't know that that's for sure going to be the case, but it's definitely under scrutiny and is a risk factor for Apple. And it just highlights that you're buying a company that is priced as a growth stock, despite the fact that it's not really a growth stock right now. So there are absolutely some reasons to love Apple stock. The iPhone is a phenomenal product. I don't see anything replacing it as the must-have personal device for hundreds of millions of people around the world anytime soon. On top of that, you tack on accessories like AirPods, and then services that have been growing like crazy. Both of those segments, like I said, growing at about 20% compound annual growth rate over the last 7 years. So those are three big reasons to love Apple as a stock. On the downside, the biggest reason to sell is that services segment is really relying on that payment from Google, which is under investigation, and you're paying for a very expensive company, about 30 times earnings. So like I said, priced as a growth stock, despite the fact that most of the business is not really growing right now. So that is the risk that investors are taking. But obviously, this is a company that is going to trade at a premium given the strength of that product line. So what do you think about Apple stock? Not just the good, but also the bad. What is the biggest risk that you're looking at in this stock? Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing here on YouTube. Thanks for watching, everybody. See you here next time.